What's up, everybody? Welcome to Gray Rabbit Finance. I'm your host, Tyler, and today we will be covering Part 1 Summary and Key Points of one of my all time favorite trading books, Tools and Tactics for the Master Day Trader. Let's hop in. Alright, in Chapter 1, I'm going to give you the first 5 seeds of wisdom that I found most useful. Seed of Wisdom 1 The Master Trader requires only a few tools. The best traders are minimalist. They find 2 or 3 tactics or techniques that work consistently. Once they've found them, they simply implement them over and over and over. Repetition really does have value. Seed of Wisdom 2 Why the Master Trader Trades with Charts. Fundamental analysis, while important, does not help the trader assess risk and timing issues in the here and now. This is where technical chart analysis outshines fundamentals. It would be the height of naivety to think or expect charting concepts to work all the time. They don't. At times they fail, but even when they do, they are serving the astute traders with valuable messages. The trader has only to learn how to listen. Seed of Wisdom 3 Charts don't lie. Every stock move is driven by one of 3 emotions: greed, uncertainty, and fear. Uncertainty being the pit stop between greed and fear, the 2 most dominant emotions. When the most dominant group of players in a stock is being driven by greed, the stock will rise. We call this the bull phase. When the most dominant group of players in a stock is being driven by fear, the stock will head steadily lower. This is the bear phase. When the dominant group is uncertain, on the fence so to speak, prices will stabilize in a sideways pattern known as a ranging market, as if for a brief time it had no home to go to or direction to travel in. Charts give us the power to be able to quickly assess what the real players in any given stocks are experiencing. Charts don't lie. Seed of Wisdom 4 Love, the trader's greatest power. Love is considered by many philosophers to be the most potent force known to humans. When love is lavished on our children, they grow strong and build noble characters that successfully and audaciously lead them into the arms of a welcoming future. When love is directed toward one's spouse and/or one's chosen field of work, each walking moment brings with it a warm welcome mat that leads eternally into the house of prosperity. There is no doubt in my mind that life and the world itself seems to be completely yield to the power of love. And those who have it in abundance and generously spend it on something are richly rewarded. It is my belief that if the aspiring trader can truly learn to love this art we call trading, no obstacle will be able to withstand the potent force created by the mighty combination of love and the desire to succeed. When a trader loves trading, just for the sake of trading, losses won't even have the power to stand in the way. Hardships will more easily be endured, and setbacks and periods of crisis will be viewed as opportunities and compelling reasons to excel even higher. Love is a powerful thing indeed, even for traders. And just in case you think this point does not fit into the context of this book, I challenge you to conduct a test. Try to find a wildly profitable, successful trader who admits that he or she hates to trade. Try to find someone who commands the market with incredible acumen, yet despises the craft. You can search 4 corners of the earth, and I guarantee you won't be able to find one. This is no coincidence. Traders today, who are magnificently endowed with the ability to profit beyond most people's wildest dreams, will tell you that they love trading with all their heart. The question is, do they love trading because they are winners today, or are they winners today because their love for the art of trading kept them alive when most individuals without that love would have fallen to the wayside? I'm willing to bet it's the latter. Try to love it. Seed of Wisdom 5 Traders and Fortune Tellers. The desire for certainty is a trap into which many traders continue to get caught. But it must be realized that certainty can never be found in life, nor can it be found in the stock market. Every trader must learn to accept the fact that we can never be certain of what the future holds. Once this truth is accepted, the trader will undoubtedly experience a great lift. Why is this? Simply because the search for certainty carries with it a heavy burden. It is a fruitless activity from which there can be no rest, for it will never end. Oddly, it is believed that certainty, if achieved, would bring about clarity and peace of mind. But paradoxically, peace and clarity of mind can only come into being when one realizes that certainty cannot be achieved. Certainty is an unattainable myth. Tomorrow can never be known. The only thing we can do is acquire a few tools and techniques that are designed to help us assess the odds of what tomorrow may bring. That is our only course, and that is what we help you accomplish in the second half of this book. Those who learn to seek good odds will be well on their way to becoming a professional trader. Those who seek certainty are inviting upon them a future that is wrought with failure, disappointment, and dismay. Seek better odds, not certainty. Okay guys, that concludes chapter 1. Let's hop into chapter 2. Okay guys, here's seed of wisdom number 1, bandwagon theory. Now I'm going to read this excerpt straight from the book, so bear with me, but this is probably the most important thing that you should take away from today. The bandwagon theory, a glimpse at how the market really works. Imagine a bandwagon that is rolling forward at a quickened pace. Music that is very pleasing to the ear is being played from speakers on each side of this bandwagon, and a few people currently on the back of the wagon are partying, having the time of their lives. The music, loud and clear, starts to attract many other onlookers that happen to be idly standing on the sidelines. These onlookers, unable to resist the sweet sounds of being played, run to join the party that seems to be going on. Progressively, more and more onlookers jump onto the back of this bandwagon, and those few who were initially enjoying the first phase of the party begin to leave. As the crowd of new party animals on this bandwagon grows larger, the bandwagon finds it harder and harder to move forward at the same pace. It slows, enabling more and more late onlookers, witnessing the great fun, the chance to jump on. The crowd grows even larger. Larger and larger this crowd grows until the bandwagon, heavily laden with the bodies of drunken party animals, can no longer move forward. It finally comes to a complete stop. Now that the bandwagon is at a complete standstill, more people jump on, and why not? At this point, joining the fun is easy. Absolutely no work is required for individuals wanting to join the crowd, no longer having to run to jump on board. But the nature of the bandwagon is to move forward. Its motionless state is unnatural and therefore cannot last. It tries to move forward again, but can't. The crowd piled on back is much too large. It must free itself of the heavy burden, and it does. It quickly shifts into reverse and jolts backwards, knocking a few of the party animals off the back. The music stops. Puzzled faces from the crowd begin to emerge. Before anyone figures out what's going on, another backward jerk takes place, only this one is more violent. Another large group of people gets thrown off the back. Now reality sets in. The fun has turned into a nightmare of epic proportions, and panic begins to run rampant. Some decide to jump to their deaths. Another thrust backwards sends an even larger group of drunken, off-balance people hurling to the muddy ground. It doesn't stop. The jolts backwards continue, each successive one more violent than the last. At this point, only a few die-hard wagon dwellers are holding on, their very lives hanging in the balance by a very thin thread. Failing to be completely free, the bandwagon angrily puts the pedal to the metal, and this final thrust backward is so vicious that the front wheels lift high off the ground, momentarily suspending the wagon in a perpendicular position. The last of the hangers-on crash to the ground, broken and maimed to no end. At this point, a new group of onlookers emerge from the nearby woods. They are clean and serene. Each movement they make is deliberate and powerfully energetic, for they did not take part in the tragedy that just transpired, or did they? A few of the dejected souls lying on the ground take a closer look, a look that reveals something very interesting. This seemingly new group is not new at all. It is the same group that was seen quietly exiting the party before it came to its violent end. An even closer examination by a few more beaten down onlookers reveals something even more stunning. This group not only exited the party early, they were the originators of it. My God, someone exclaims. Paralyzed and unable to move freely, all these dejected souls can do is watch, as the masters of the game go to work again. No sooner does the bandwagon's wheels hit the ground than this professional platoon bolts for the wagon. In a flash, they are on board. Easy. The bandwagon, now free of a larger crowd, can move forward freely and gracefully, comfortably carrying the more astute group with it. Its pace quickens, and before long a smooth, elegant stride is in place. After a few miles of uninterrupted movement, someone from this masterful group flips on a switch, and suddenly the loud sounds of entertaining music start again. Someone yells, "Okay, everyone, here they come. Let's do it again." Within moments, those who were the former victims of the backward crash become interested again, the music almost calling them from the grave, and once more, the never-ending cycle repeats. Now guys, what you just heard is an analogy for all the cycles of the market emotions, and I've added here a little diagram where you can see the optimism, excitement, the thrill, the euphoria, and so on. Now, if you follow that analogy, you can see all of these emotions were hit in that story. And if you can understand that story, you're going to be well on your way to becoming a master trader. Seed of wisdom 2. Money isn't everything. It is imperative that a trader be able to separate those losses due to a faulty strategy from those that are due to the faulty implementation of a strategy. If the traders fail at this, they can find themselves forever chasing their tails. Progress eludes traders who jump from one approach to the next, without allowing it time to show its merits. Money or profits cannot be allowed to influence one's opinion of a certain strategy. In this regard, money isn't everything, simply because some of the most poorly constructed trading strategies can reward the trader with profits for a while. Conversely, some of the soundest can deliver losses for a while. But it will only be the sound ones that will ultimately stand the test of time, and for us, that time can be measured in blocks of 10. After 10 trades, if the strategy you're using has not rendered any fruit, then and only then can it legitimately be questioned. As mentioned before, progress emerges in sets of 10. Do not forget this. Seed of Wisdom 3. The entry is 85% of the trade. A commonly accepted axiom on Wall Street tells us that knowing when to sell is the key to mastering the trading game. While we cannot entirely discard this notion, we can say with a good deal of confidence that entering stocks properly greatly diminishes the problems associated with knowing when to sell. Every trader eventually realizes that the very best trades are those that become profitable instantaneously. They cause no pain from the moment they are initiated to the moment they are released. What is the difference between a stock that heads lower shortly after you bought it and one that zooms higher moments after you've initiated it? The difference lies solely with the entry. The properly entered trade is like a wonderfully behaved child who causes no problems. It does what it's supposed to do when it's supposed to do it. It obeys your every command. Selling a properly entered trade becomes much easier because you are only concerned with the question, when do I go to the bank? This is very different from the question, will I ever go to the bank? This is, or will I have to kill this trade? The first question is being asked by a winner. The later two questions are from a loser, a victim. A proper entry will frequently put you in the position of asking winning questions. Yes, knowing when to sell is important, but knowing how and when to enter is more important. Seed of Wisdom 4. A positive mental attitude makes a difference. Mind, or shall we say attitude, can make all the difference in the world during a trader's developmental years. If you find this difficult to believe, all you need to do is find 5 losing traders, that should not be too hard, and take note of their attitudes. You may find that each trader loses in his or her own way, but the one thing that they will all have in common is a bad attitude toward the market, and/or a disturbed mindset. As a result of bad thinking, their every action will lack power and be devoid of resolve. Their decisions will be weak, and the eyes through which they meekly peer will reveal terror. If you were to find 5 winners, on the other hand, you would immediately sense an entirely different form of thinking at work. These traders would seem to be from another world. The position in their chairs would almost seem regal. Their eyes would be sharp, clear, and fierce as they await the next opportunity. The movements they make would be deliberate, their decisions quick and precise. While they would be all about the business at hand, they would also seem relaxed and comfortable. When they win, they would not have to shout it out to the rest of the world because it would be nothing strange. Many might make the common mistake of assuming that these traders can have mindsets like that because they win. But that would be far from the truth. A more careful look would reveal they are winners because of their mindset. The self-made successful trader does not have a positive attitude because he wins. He wins because he dared to have a positive attitude. Remember this. Seed of Wisdom 5. Trading with Attitude. The attitude with which we approach the market has a funny way of materializing in our experience. In a sense, it is like a mirror that will reflect both our strengths and our weaknesses, and reveal our most hidden desires to the rest of the world. Fear that the market will not treat you like a friend, and you invite upon yourself the wrath of an enemy who won't quit. Look at the market as a place or a field from which you can extract obscene sums of money, and you have a better chance of making every one of your material desires become a reality. Each day I wake up, I remind myself that the market has opened for one reason and one reason only, to allow me to make money. In my mind, the purpose of each participating trader is to take the other side of my trade, to give up their stock when I want it, and to take my stock when I want to rid myself of it. This may sound cocky, but I view the market as my world, and the results I often get from it would strongly suggest that it is. Now guys, that concludes chapter 2. Let's hop into chapter 3. Seed of Wisdom 1. Make your losses work for you. Understandably, we spend a great deal of energy and effort trying to avoid the loss and the pain that goes with it. But have we ever stopped to contemplate the grand purpose that loss serves? Isn't it only through frequent loss that we can be sure our actions need correcting? In its purest state, the pain of loss serves as a personal messenger of change. Each time we violate a law, it tells us, in no uncertain terms, that our actions warrant dramatic change. This is why we grow through loss and excel by way of pain. The discomfort gets us to act, to get off our backsides and do something. Without the agony of defeat and the pain that rises from that, we doubt if our traders would ever grow. Learn to respect loss, because in a weird way, it is precisely what will lead the way to the future you want. I like to think of loss as just paying some tuition to the market for learning. So that's one way you guys can think about it too. Seed of Wisdom 2. Small losses, the hallmark of a master trader. It has been said that the difference between a winning trader and a losing one can be measured in eighths and quarters. If this is true, and we believe it to be, the management of one's losses is what makes all the difference in the world between a winner and a loser. Let's face it, it is not uncommon for traders to luck into winning trades. In fact, during a bull market, one can luck into winning trades rather frequently, simply because the rising tide rises all boats. This leads us to the incapable fact that winning trades are not always the truest indication that the trader is a winner. In reality, there is only one hallmark sign of a professional: small losses. No matter how lucky novices are, the truth about them can be found out by taking a look at the size of their losses. On the other hand, no matter how off professional traders are at the moment, you can be sure they are the real deal if their losses are consistently minuscule. The point is this: you can fake being a winner for a while, but you can't fake or luck into a record of consistently small losses. That hallmark sign belongs exclusively to the astute, the pro, the winner. Novices can't consistently lose small. It takes too much skill and discipline to pull that off. They may be able to luck into an occasional big win, but their losses will rat them out every time. The hallmark sign of winners is not how they win, but rather how well they lose. If you learn to manage your losses, you won't even have to look for wins. They will find you. Seed of Wisdom 3. How to lose your way to success. Every loss we experience tells us a little bit about ourselves. Put enough of these losses together and they will reveal more about you than your loved ones will care to know. Since traders will never be able to totally eliminate the experience of loss, it is a permanent part of life's experience. They must learn to use it for their benefit by looking for the gem that lies deep within each loss. This gem or lesson will contain a valuable message that will reveal precisely what they have to do or change the next time. If you are perplexed, the answer will invariably be found in your losses. Decide today that you will not allow another loss to come into your life without extracting from it the gold it carries within. Make searching for the diamonds in all your losses your magnificent obsession. Do this, and that magnificent obsession will lead you to a magnificent trading career. Seed of Wisdom 4. The two lives of a master trader. Every individual, in a sense, lives two lives. One as a developing child or adolescence, the other as a developing adult. Every trader has a childhood as well, but very few end up enduring long enough to graduate to adulthood. Adulthood as a trader requires that all the lessons of childhood be learned, digested, and properly put into practice. If this maturing process does not occur, the trader stays trapped in the lower depths of childhood, struggling for maturity and seasoning. The very best way to ensure that you are maximizing the learning process during your childhood is to keep a trading journal. Not only should you track and make comments on each play you make, but your thoughts about trading should be written down, ideas should be maintained, realizations kept. Each lesson learned should be immortalized by giving it a special place in your trading journal. This journal will act as a mirror that reflects who you are, and also serve as a roadmap of where you should be going. By developing the habit of jotting down each experience, each emotion, each thought, you ensure the continual process of growth that will eventually lead to that much desired state of adulthood. It is in that second life of adulthood that all the hard work and struggle endured during the first will manifest itself in your trading experiences each day. Seed of Wisdom 5. Get the most from your tuition. Our winners, although enjoyable, teach us nothing. It is our losses that lead the way to trading mastery. Okay guys, that concludes chapter 3. Let's hop into chapter 4. Chapter 4, Education of the Master Trader. Seed of Wisdom 1. The character of your teacher matters. An idea shared by many Westerners is that the character of the teacher does not matter as long as the teacher has the information. This is all wrong. It is actually the character and persona of the teacher that gives the information imparted vivid life. It brings the knowledge into true being. It is the teacher and his or her qualities that evoke true learning, and that deep-seated passion and experience. As a person who trains and teaches traders all over the world, I have come to the realization that teaching requires more than just spitting out knowledge. Facts by themselves don't give wings to the mind or lift the soul in any way. It requires special gifts to impart wisdom. It requires unique tools to raise the level of another's consciousness. These tools that make the teacher a great instructor can't be taught. Things like passion, enthusiasm, integrity, energy, conscientiousness, care, concern, and sensitivity are not items that can be purchased or picked up in some second-rate public speaking class. They are priceless qualities that must evolve over many years. When they are present in a teacher, they stand as a dynamic testament that you have found a soul worthy of your time and attention. Those who seek out teachers who specialize in the art of trading should scout for those who possess the right information as well as the right character traits. Now that concludes chapter 4. Let's hop into chapter 5, guys. Chapter 5, The 7 Deadly Sins of Trading. Deadly sin number 1, failing to cut losses short. Never place a trade without first determining where you will bail ship if things go wrong. Number 2, always adhere to your predetermined stop loss. Number 3, if you are having a tough time adhering to your stops, start off by getting into the habit of selling half of your position if the price moves against you. Deadly sin number 2, dollar counting. For each trade, establish 2 potential exit prices at which you will sell your entire position. Sell only if the stock you are in violates the stop loss point or hits your objective, whichever event occurs first. If the urge to exit before either sell point is met becomes overbearing, satisfy the urge by selling only half and letting the remaining half sit until the strategy says exit. Deadly sin number 3, switching time frames. If you enter a trade in one time frame, make sure to construct your exit points in that same time frame. Do not adjust your stop loss downward when you're long or upwards when you're short. Deadly sin number 4, needing to know more. Be very reluctant to buy immediately on the heels of good news. Use charts to form your buy decisions and sell decisions. If you find yourself hesitating because you'd like to know more, stop and ask yourself, is what I'm looking for necessary for the trade, or am I just looking for more comfort? Deadly sin number 5, becoming too complacent. Reduce your lot size by half after a series of winning trades, and reduce the frequency of your trades. After a long winning streak, statistically you're more likely to occur with some losses. So don't get overly confident, and make sure that once you've had a good streak, not to give it all back to the market. Deadly sin number 6, winning the wrong way. After every winning trade, review each component of the trade: the entry, the stop loss, the placement, waiting for the price action, money management, the exit, etc. Recognize that the two evil H's, hoping and holding, will be the major culprits that most frequently lead to winning the wrong way. And last but not least, deadly sin number 7, rationalizing. Asking why stock is a certain way, checking for the news, thinking in terms of maybe. When rationalizing your trade, is better just to exit your position. If you're having any doubts or thoughts like that, it's just better to exit and step back from the market. Okay guys, that concludes chapter 5. Let's hop into chapter 6. Chapter 6, 12 Trading Laws of Success. Law number 1, know thyself. It is crucial for traders to know who they are and what they are. If traders are trying to fit into a style that goes against their psychological grain, the results could be disastrous. So guys, you gotta figure out your personality. Are you more of a scalper? Do you want to be in and out all day long? Or are you more of a swing trader where you want to hold a position for a couple days? You gotta figure out which type of trader you are. That's very important. Law number 2, know thy enemy. Never place a trade without first asking, who's on the other side of my trade? And number 2, never look beyond yourself when laying blame. There's no one to blame in trading except for us, so we gotta remember that. Law 3, get thee some education fast. 1, seek out a mentor. 2, read the trading books that really count. Law 4, protect thy most valuable commodity. We must do everything in our power to protect our initial capital. That goes without saying, guys. If you run out of money, then you can't really trade anymore. So we need to protect our money at all costs. And we need to make sure that, like mentioned before, you have to keep your losses to a minimum. Being amazing at losing is going to make you amazing at winning. And losing small, not taking big losses. Law 5, keep it simple. We must keep our trading strategies simple. Less is more. Ask yourself these questions. Will your trading tactics and techniques thoroughly confuse an intelligent 12-year-old? Does your approach call for mathematical calculations? Do you need a calculator to trade? Are more than 3 pieces of software required to come up with your trades? Will it take more than 5 minutes to write out your trading strategy on paper? If you answer yes to any of these questions, your trading strategy is probably way too complex, more complex than it needs to be. So we need to keep it simple. And I'm going to go into trading strategies further along in this series. Law 6, learn from thy losses. One of the most valuable tools available to a trader is not some fancy market indicator or some sexy trading technique, but a simple yet effective diary of losing trades. Law 7, keep thee a trading journal. One of the most valuable actions a trader can perform is to keep a personalized journal of trading errors. And as you can see, guys, I've put the example from the book of how the author keeps his trading journal, and I actually keep mine in a quite similar format. So feel free to copy that for your own needs. Law 8, don't make low-priced stocks the main focus. If there is one mistake, one cardinal sin I've run into a zillion times, it's deciding on a stock play based on price. Guys, like mentioned before, we need to just look at the charts. The price, like having a low price on a stock or on a forex pair, it doesn't really matter. We need to look at the candles, and we need to look at our indicators that we use, and we need to look at the chart to determine which markets we want to trade. Law 9, don't diversify. We do not want to minimize the fact that diversification does have its place, but we have found that it is largely an overrated practice when it comes to the somewhat different challenges of short-term trading. So guys, if you have a retirement account, by all means you need to be diversified, but when it comes to short-term trading, we need to be focused on one or two things maximum. I only trade, when I'm trading forex is what I normally trade, I only focus on one pair at a time. And this helps me put all my energy, all my focus, all my instincts into one pair, which makes my strategy much easier to execute and just makes my trading much more successful. So I don't know, you're gonna have to see what works for you, but I think this is great advice. We need to keep our efforts focused and be dialed in. So just remember that. Law 10, realize that no action is at times the best action. One of the most valuable possessions of master traders is their ability to properly time inaction. Inaction is a very potent tool that only the most successful traders have learned to use. A tool that not only saves them tens of thousands of dollars, but one that helps them make tens of thousands of dollars too. And guys, in my introduction to Ichimoku series, I talk about when the markets are ranging. I tend to avoid ranging markets just because they can be pretty tricky to trade. So when I see a ranging market is when I typically practice what they call in the Tao Wu Wei, which is the non-action. So, no action is sometimes the best action. So remember that. And over trading can get you into trouble. So you need to make sure that you're not over trading. We want quality over quantity. Law 11, learn how to bow out gracefully. If any one or more of the following occurrences take place, perhaps it is time to bow out gracefully. If you've lost 2 times in a row after enduring a winning streak, it's time to take a break. I would get onto a paper trading account and just keep practicing for the next few trades until you get your confidence back. Number 2, the market as measured by the S&P futures contract violently turns negative. Number 3, you feel off base, uncertain, confused, disoriented. You don't know why. Number 4, your predetermined trade plan is shattered by some sudden market event. Guys, it's very important, especially if you're trading forex, to check the news and to check when CPI data and other news like that is going to be released, because that can affect the forex markets very strongly. And I like to use FX Street for all that data. So I'm going to put a reference link below for that. Number 5, if you feel ill, don't trade. Number 6, your frame of mind is frazzled. Perhaps someone in your family has passed away, or I don't know, your girlfriend or boyfriend broke up with you. You need to make sure you take some time off, because if you're not right in here, when you step up to the market has a way of humbling you. Number 7, you're dealing with a personal problem. Exactly what we just talked about. So if you're feeling any of these things, guys, it's okay to take a step back from the market and just regroup, get yourself centered, exercise, do some breathing exercises, cold showers, all that trendy stuff. And just get your mind right, and then come back to the markets. And don't be afraid to paper trade for a little bit. Law 12, don't ever make excuses. They never made anyone a dime. Trading is the last bastion of total freedom. The partners in law and accounting firms really work for their clients. Doctors really serve their patients. Traders work for and serve only themselves. No one can rightfully lay claim to the trader's successes, because it can only come from within, and failure cannot be co-owned or passed off to others. In short, traders live in a world that is all their own. Every peak and every valley belong to them. But because there is nowhere to hide or escape the personal responsibility of each act, losing traders often find it easier to create excuses. Blaming others makes it physiologically easier to cope with shortcomings. Accusing a newsletter, blaming an analyst, and faulting the Wall Street system are just a few of the ways losers evade the fact that they alone are responsible for their decisions. Don't become one of these excuse makers. The path they are on is clear. The final destination, which can only be failure, is already known. Take full responsibility for your every action in the market. Recognize with deep honesty that no one has the power to make you act. Know in your heart that the final endorsement of any act belongs only to you. The very best traders live their lives in a world built on self-reliance and total independence. In that world, the fault for all losses lie within themselves. But also they know that they have the right to lay claim to all the wonderful gains. And the traders who make no excuses will eventually have many more gains than losses. Guys, no excuses. In life, there's no one to blame but you. If you start blaming, the blaming can go endless. You can blame on and on and on forever. So just make sure that you take personal responsibility. And that concludes chapter 6, guys. The 12 trading laws of success. Now let's hop into chapter 9. Now this chapter I thought was pretty interesting. Because these words come from his mother, and the author said that he had actually learned all this from his mom before the age of 10, and that these lessons are all you really need to learn how to become successful at trading. So, lesson 1. It is okay to fall as long as you learn from the process of getting up. To this very day, I preach and practice the art of learning from my trading errors. Each of my trading losses serves as a springboard to a higher level of trading mastery. Lesson 2. Always recognize what others are feeling. This is precisely why my partner, Greg Capra, is such a successful trader. He always seeks to understand what the other traders in a particular stock are feeling. Pain for other traders can mean opportunity for you. Why? Because successful trading is nothing more than buying stock cheaply from those in pain and selling it expensively to those who are greedy. Lesson 3. No matter how bad things are today, tomorrow will present another opportunity to get it right. As a trader, you cannot bring the baggage of yesterday into the possibilities of today. So guys, do not dwell on your mistakes. We all make them, and we will all make them again in the future. But the thing is to learn from each mistake and extract that golden nugget like we talked before. Lesson 4. Know why you are making every action you make. Never make an action, a buy or sell position, from the emotional state of fear or greed. Lesson 5. Never take yourself too seriously. Whenever I am on a big winning streak, I hear those words ring in my ear. And like we said, guys, after you've had a big winning streak, it's best just to take a step back, reduce your position sizes, and not to become overconfident in the process. Lesson 6. Only fight battles you can win. From this wisdom, I learned to pick my stocks, my entries, and my exits very carefully. This is like we mentioned before, that the entry timing makes all the difference. So guys, really, that's probably one of the most important things, entry timing and keeping the losses to a minimum. So just remember that. Lesson 7. Life is not something to conquer, but to befriend. This lesson from my mom taught me to work with the market, not against it, to view it as an ally that can enrich, not as an adversary that can take away. Guys, attitude is everything. We need to make sure that we step up to the market with the proper mindset and the proper attitude, and the proper self-belief to know that the market is there to enrich us, not to take away from us. Lesson 8. A loss does not always make you less. Sometimes losing is winning. And like we said, guys, if you cut your losses to a minimum, that at sometimes can be actually a win, because you don't want to take a full loss. You always want to get out of a trade if you have any doubt or hesitancy. It's better just to exit and then regroup and gather some more information about the charts and the market and just kind of take a step back. And guys, that concludes chapter 9. So this concludes part 1 of the summary and key points for tools and tactics for the master day trader by Oliver Velez and Greg Capra. Guys, I highly recommend picking up this book. I'm going to cover the rest of it in another part 2 in another video later. But I consider this book to be like the Bible for traders. So definitely you need this on your shelf if you want to learn about trading. But after watching this video, I think you guys have a good overview of what the author wanted to present to you about having the proper mindset and some of the most important things to remember. So, I hope you guys enjoyed this content. If you did, feel free to like and subscribe. And if you have any questions for me or ideas of new content to make, please feel free to post it in the comments below. And until next time, guys, peace.